Here is the false breakout trade that I took yesterday, and in the trade review section I'm going to share with you the 3 things that you need to look for when you are trading the false breakout. And if you're still wondering if you should take this as a breakout trade or you should fade the trade to take opposite as a false breakout, then I will also be covering that as well in the trade review section, so do watch out for that. Hi, my name is Ming Jong and welcome to another episode of the daily market analysis for the S&P 500 E-mini futures. That's for the session of 17th of November. So in this video, I'm going to share with you the market recap from yesterday's session and also my trade review in a 3 minutes time frame, which I will include the entry, the exit, and also the rationale behind. So in this case, this is a false breakout setup. And going forward, I will also share my trading plan together with the important levels that I'm watching for the session later. Alright, so let's just get started now. So let me just get back to the daily time frame and let's start from the daily chart. Okay, so you can see from this daily chart here, yesterday we have a kind of a breakout session here. So finally we have a commitment here close above the previous swing high level, which was the all-time high level at 35.87. And if you look at this little portion here as the trading range, then definitely we have a breakout session here as well. But you can see that overall the volume is quite normal, not too threatening at the moment. But let me get down to the hourly time frame and let's talk about what's happening from yesterday's session. So you can obviously see this from the smaller time frame, the hourly time frame. There's actually a false breakout or a spring type of a trade that happened that's relying on the Globex low from the previous day. So right after the spring happened, the false breakout happened, and we have seen a little bit of the rally up, but no continuation to the upside, and eventually have another test down, and fortunately we have a close at a high there. So pretty much still within a relatively tight range during the US session. That's about probably 20 points. And prior to the US session, that's during the Globex period, especially in the Asian time zone, we have seen a gap up and followed by a grinding up action, and eventually just a minor consolidation or reaction during the European London session. But we have a spike close to the US session as well. But anyway, that's the hourly chart from yesterday's session. And let me get down to the 3 minutes time frame and let me show you the 3 things that you need to do when you trading the false breakout and how to actually differentiate whether this is a true breakout or a false breakout. So I'm going to share it with you here. Alright, so before I dive into this trade, let me give a bit of the context here. So that's the US session about 10:30 p.m. at my time zone, and here is all the Globex session, the non-regular trading hours. So we see that during the Tokyo session, the opening session, we have seen the push up, gap up, push up, and subsequently followed by a consolidation. And actually that ranged for quite some time. That's pretty much from about 8 a.m. to around 8 p.m. So it's about 12 hours trading range, going nowhere, and eventually have a push up, probably generated by some news, not sure what's going on, but definitely it's a push up with some rejection show up and have a reaction down, and that also continue in the US session as well. So pretty much in this trade, I rely on the Globex session low here, which I mark it in this dotted line here. So if you recall in my video yesterday, I do talk about possible long entry whenever we see a reversal at the key levels, and the key levels that I'm actually watching is somewhere around 35.87 or even the last hour bars. So that could be range from 35.70 to around 35.90, and also this breakout bar as well. So pretty much this reaction actually tested this breakout bar here. So it didn't really touch the 35.87, which was the very obvious level. So that's how I actually operate the structure from. So I lean against the global low from the previous day. So that's the trade context. So let me just show you the actual trade here. So you can see that I have kind of marked it up already. So let me walk you through step by step. So first of all, the first thing that you need to take a breakout or the false breakout is actually to identify a level. So it's very obvious, right? I know. So the first thing is definitely identify the level. The level that I was identifying was actually this level, the global low, somewhere around 3600 or probably 36.02, 03. So once you identify a level and you just watch the price approach this level, and when it's approaching the level, there is only two things can happen. You either take the breakout or you take the false breakout, provided there is some valid setup. So I think it's very obvious, because until this point, you probably see this type of the bar, like big spread bearish bar, and breaking out the support level, and that comes with the increasing of the supply. So that looks very bearish, isn't it? So I also agree, yes, it looks bearish. But even at this point, even we think that it's a breakout trade, we still need to seek for the confirmation. So how do we seek for confirmation? So if this is a true breakout, breaking out, we definitely want to see some wick rally up and then followed by a continuation to the downside, unless it can just keep going down without any retracement or reaction to the upside. So this is what I'm actually seeking for. I always avoid the first breakout. You have been following me for some time, watched some of my videos. I always talk about during the first breakout, whether it's breaking out to the upside or downside. So in this case, so this is a breakout to the downside. You can see that a spike of the volume, and a spike of the volume also equal to the increase of both supply and demand. So because this is an obvious support level, whenever there's a breakout happen, there's a spike of the volume, which is kind of expected. So it's very crucial to wait for the test or wait for the confirmation. So we just want to see some kind of the wick rally to show inability to rally up or to get back above this support level for a true breakout. And if that happens, then I'll probably take the second breakout when it's actually breaking out to the swing low level there. So you can see that this is a breakout. I expect some kind of the wick rally followed by a continuation to the downside. So this could be the breakout trade to take. However, there's definitely some clue behind. So how do I just make a decision that I should really take a false breakout instead of a breakout? So the answer actually lies in the supply and demand. So just take a look at these two bars here. So that actually reveal a lot of clue. So whenever we want to decide a direction, whether it's going down or going up, so it's all depend on the supply and demand. And also definitely you need to look at the price action as well, so that you can make a conclusion out from that. So let's take a look at these two bars alone. So in these two bars, we have very similar volume here. So although the last bar here with a bit of the demand tail actually have slightly higher volume. So when we compare this, this is something that you might just call it as a volume spread analysis, or you can call it using the Wyckoff's law, effort versus results. So I definitely see the effort versus results here. So in the first bar, we have a big bearish bar right here, and that's using this much volume or this much effort. So the second bar here, we even have higher effort to push the price down. However, what we have is a smaller spread compared to the previous bar, and also the progress to the downside is tiny. So take a look from close to close here. So the progress to the downside is little compared to the previous bar. The progress to the downside is huge. And also we have a demand tail as well. So all these are the clues that showing there is demand come in at this bar, the last bar here. So at this point, even if you think that, oh, okay, I think it's bearish, but until this point here, at the close of this bar, you probably should change your bias to bullish bias. So that's the second thing. Just check out the supply and demand to determine the direction here. And the third thing is actually to look for confirmation. So here, until this point, after the close of this bar, it only tells me that there is demand come in. So whether there is a follow through to the upside or maybe there is a failure, we don't know yet. So I want to see the confirmation. So this is the third thing that I think you need to look for. The third thing that I always look out for is actually the confirmation. So here comes the confirmation bar. So in this case, it's relatively straightforward. 2 bars compare the volume, and then the third bar is a confirmation. But sometimes it's not always the case. Sometimes you might need to wait for a few more bars or to wait for a few more candles to unfold in order for you to jump to your conclusion. But in this case, it's relatively straightforward. So the third bar actually acted as a confirmation bar, which actually reversed the movement and also commit above this support level. So here's the 3 things. First, that's the level. So we think that it could be a breakout or it could be a false breakout, a failure. Second, we analyze the volume. So it actually shows us that there is demand come in here. So the breakout to the downside probably is not likely, but we still need to seek the confirmation, which is the third thing. So actually come in here. So this bar actually just reverse and commit above the level that we are looking at. So these are the 3 things that I always want to check whenever I take the breakout or the false breakout trade. So probably you might want to take a closer look and do some more research yourself. Okay. So right after I entered the trade, long trade, right after the close of this confirmation bar, I just pretty much trail my stop and close it somewhere around here, which is close to the swing high level. Is not the best exit because it's pretty much tied to time stop, because it's pretty much close to 12 a.m. at my time zone. It's kind of late at my end, so I just want to exit the trade. So I can see that pretty much I think I exit in this bullish bar here. So I see these 2 bars, 2 bearish bar as a reaction, and then followed by an increase of the demand to push the price up, but no follow through or no commitment to the upside. So I just exit the trade, and also it's kind of late at my end. So overall is about a reward to risk ratio of 1.1. So not extremely profitable, but still a profitable trade. And I think going forward, that should be plenty of the trading opportunities. So I just want to take every trade that I can as a valid trade. Subsequently, you can see that there isn't much follow through. We have temporary commitment above the swing high, and then followed by another reaction down, tested the level again, and during the about 3 a.m. in my time zone, and you can just see this rally test and then continuation to the upside. So maybe some of the opportunities can be sick at this portion here. Alright, so let me just get down to the hourly time frame and let's talk about the current market condition. So you can see that right now we are still pretty much fluctuating within this trading range here. I think that could be from, let me see, that's about 3600 to around 3640. So that's the trading range form. So I think my trading plan is very simple. Just want to buy low, sell high, or sell the high, buy the low. So it's a range bound playing. For the immediate support level, definitely would be the previous day low, and in terms of the day high, that could be somewhere around here. So that's the previous day high. But in terms of the swing level, that's the swing high here, and also I think there's a very obvious level at 35.87. So that could be the support area. So if there's a chance for the price to come down and have a test and rebound, that could become my long entry. Otherwise, you probably can aim for some kind of the short entry upon rejection. So overall, for the swing position, I think we still can see further push up to test the all-time high level here at about 3660. So let's just see if we can just hit that and how it actually unfold right after it hitting there. This is the end of the video. Hope you enjoyed it and get something useful out. So if you'd like to learn more on how to increase your winning rate, definitely check out the video that showed up on the screen right now. And do remember to subscribe to my YouTube channel and also to join my email list for free so that you get my weekly email update for the stock watch list. Alright, thanks for watching. I will talk to you soon.